Hi everyone, it's Paul Brown here from Wealth21. We're approaching the end of June 2022 and what's been a pretty tumultuous year for investment markets. So this market update, we're going to run through some of the market movements. So first of all, anything in this video is just general information only. So if you have any questions about your own personal situation, please give us a call or seek advice from an authorised financial advisor. So firstly, let's look at the market influences, and we've chatted about this in videos earlier in the year, but the major factors are inflation and tighter monetary policy. We're actually seeing inflation rising in both Australia and globally, actually, and the RBA has been raising interest rates, as have central banks around the world. That's led to a lot of a pretty rapid increase in bond rates, so we'll chat about that. Other factors are the conflict between Russia and Ukraine, which is ongoing. That's impacting global food supply and energy supply as well. And we've also seen COVID lockdowns in China, but they are starting to ease. So firstly, let's look at the Australian situation and inflation. So inflation in Australia did jump up to 5.1% most recently, and that has led the Reserve Bank to increase interest rates reasonably aggressively. We're actually sitting at 0.85% at the moment, after being at 0.1% for quite some time since 2020. Overall, though, the trend has been for interest rates to be falling for best part of a decade. So it is to see interest rates rising again has triggered some volatility in the markets, and particularly in bond rates. And bond rates probably been the most significant factor influencing our markets generally. So this is the Australian 10-year bond rate, often called a risk-free rate of return, and during 2020 it was around 1%, and then did start to increase a little bit in 2021, but the rise we've seen in 2022 has been significant, from about 1.5% to around 4%. I think it's trading at about 3.8% as of today. But that's a very significant increase in bond rates, and not something we've seen probably since 1994. So that's when bond rates rise, it means that the price of bonds actually falls. So there's an inverse relationship. And this is a chart of a bond ETF over the past 5 years. And the green line shows that the underlying value of this ETF had been increasing for about 4 years at about 2.1% per annum. So bonds are considered defensive assets generally. So there's a steady rise as interest rates in Australia had fallen. The price of bonds had steadily risen. But then what we've seen with bond rates increasing so dramatically, we've seen this pretty significant fall in the index for composite bonds, effectively 15.7% over 200 trading days. So that's had a very, very significant impact on the markets, and particularly for diversified portfolios, because bonds are generally defensive assets in a diversified portfolio. So that's led to falls in defensive assets within portfolios. So looking nextly, there's nothing unusual about volatility in share markets. This is a 5-year chart, and it shows a 37% fall in the share market in 2020 due to COVID. But then we saw a recovery of about 67% over 350 trading days. Towards that was around August 2021. And during this year, we've seen a couple of falls. It's been like a bit of a whipsaw, really. We saw a 10% fall, and then a recovery, and then a 15% fall over the past 40 days. So turning our attention now to the US, US inflation has been quite high. It's been above 8% for a few months now, currently at 8.6%. And that's led to the US Federal Reserve taking a pretty aggressive approach with interest rates. The most recent increase was a 0.75% increase, the last meeting, and that took it from 1% to 1.75%. And the US, this is just a chart of the global share market, so like an overall global share market index. And again, you can see a similar trend. There was a very significant fall due to COVID back in 2020. Then the global share market's actually pretty much doubled over 420 days. And now in 2022, we've seen the global share markets generally fall back about 23%. But there's been other sectors of the markets that have fallen even further, including the NASDAQ, which is probably down around 40%. So I just want to finish up with a couple of quotes. It has been a pretty tumultuous period of time. This is a couple of quotes from Warren Buffett, a famous US investor. And the first one is, don't take yearly results too seriously. Focus on 4 to 5 year averages. You notice when we do performance reviews of portfolios, we're very much focused on the 5 and 10 year returns. Returns over individual years can be quite volatile. And the second quote there is, the stock market's designed to transfer money from the active to the patient. So this is not a time to be making, rash changes to people's investment strategies. This is a time to be patient and let the market work through. So if you have any questions on your investments, please feel free to give us a call, and we look forward to hearing from you. So take care. Thank you.